E from marketwizards.com and eminywizard.com. And it's just after 10 o'clock on the 4th of April, 2019, reminding traders to use risk capital you can afford to lose. Question has been asked, can you review the squeeze pivots? So admittedly, we're doing them in hindsight, although we had talked about all of these ideas earlier. We had said, first of all, that 72 to 73.5 was technically our aggressive support. So we start with that premise. The low of the day has also got to be a squeeze pivot because until broken, that's support. That's just a given. The angel, the first bar here at 74, that's 75.25. So that is typically is going to be a squeeze pivot if it works. So the low of this little doji is also a squeeze pivot. This little double in here, we had said this 77 area we thought would be very key, and a lot of it had to do with, first of all, I had a magnet 77, 75, and that was referencing yesterday's middle zone as supportive, trying to push up and get to the 80 area. That's all we know. Try to get the gap closed. So this is a squeeze pivot right here at that 78. Remember, we said this was our theoretical, that was an important magnet, and so we've held above that. So by definition, we chose that as our pivot, right? The 78 was going to be an important pivot, as well as 80. We said this zone is going to be important. So on the way back, you've got to break these guys before you do any damage. And based on yesterday's range, we've held the middle. We've come up and tested 1, 2, 3 boxes so far. And the market starting to run into some resistance based on yesterday's range type trade. So we said let's use, theoretically, let's use 88 as our resistance. So once we take out the overnight high, then we've also got to look back at yesterday's levels to see where resistance may or may not come in and do the same thing. So the squeeze pivots for the short side theoretically have been, first of all, this 84.75, yesterday's IB, and then technically this next high right here, about 86.25. And then probably these right in here at 88, this doji bar. So I'm just doing the opposite so you can see the same concept in the other direction, squeeze pivots, short side. So that's a framework that we're operating under. Does that help? Five-minute chart, rising moving averages. Shorts have to bust at 78 and keep on coming. They want good fortune. It's a fast chart. Overnight high zone. Take a look at your angels and demons. Originally, we had this 82 area. We're retesting that 82 to 81. Shorts have to have continuation if they have any posture whatsoever, or else can still be squeezed back up and get to that double top test. Yesterday, let's put on yesterday's demon. By virtue of that, that's our resistance for now. That happens to be T2 today. I think it's going to take time for any type of a move to develop today. It's a little squeeze type trade. So I hope that helps. Does that give you the feel for what we're talking about? And some charts will be easier to see than others. And here's your 5-minute variety, which we said we would keep an eye on today without any filters on it. Just let your mind absorb the patterns and try to see things that perhaps you can't ordinarily see. You know, third time through trade right there. Ignored the high, takes it out, gotcha. Right, count them out. 1, count these as 2, count this as 3, gotcha, RTH. You know, that's how you start to see patterns by then going back and saying, well, I guess that's a wedge. Well, I guess I could see that pattern now. You know, designed to stop run all the aggressive shorts. Okay, so now we're trying to give more meaning with something more structured. Tell me which box we're in right now. What color? What zone? What zone are we in? We in the red circle box, yellow circle box, or are we in the green circle box? Red circle. So we know that this is the current range based on the predictive model that we're trying to resolve. So we can say this held overnight and yesterday, late yesterday, this held yesterday. So right now we can say, well, that's our resistance. This yellow box is our fighting range right now. Not forever, not for the next 3 weeks, just until we resolve it. It could take 3 weeks. It won't, but it could. And until that happens, until we break this 81 or this 86, it appears that this is the predictive model box that needs to be broken to start to give us structurally some kind of understanding of where our next fighting range is. That's what I'm trying to do with these type models. So as Zeke said, that 91.5, 92 resistance target, that hasn't gone away. It's still there based on this model. We may not have gotten to it. We may have had to come a long way home to go get it, but it's still possible. And all we know is for now, anybody that has played for the long side using that 67, 68 area support, and today the 72 support, you got a lot closer to it than you were back here. You know, this has been a profit-taking swing. Why not? And then the bounce and retest failure or continuation, too early to tell. And then try to keep an eye on the angle of your push. Sometimes they're too steep. You know, this type of a gotcha comes back. You know, that's your megaphone. You can see it. And what I'm trying to do, obviously, is teach concepts that make me immaterial, make me irrelevant, where you as a trader can just hear my voice and say the things you need to be hearing, and then start to hear it in your own voice and say, okay, I get it. I get it. That's why this seems to be a resistance right now. Stop, run the shorts, and then come back and get a nice solid trade. I think we have an unfair advantage with these type of tools. That's just me. Big boy in the trade has come back and said, let's make sure that we get some profits. Let's start to defend this territory. This is a great chart. And depending on what you want to look at, whether it's moving averages or whatever, this should be our angel that we are attempting to test right now. It's 80 and a quarter for RTH. Two-way day playing out. Stops down if you are short. And note that we've got the middle test right here at 80. Two-way day. Does that help? This is a reactive trade. This is an impulsive trade. And I've said before, you can probably do just as well to get your daily VIG by taking reactive trades. You don't want to trade the middle in here and it pushes and it pushes. Then you have to be willing to take this back end trade and hope it works. With no thought about it coming through or anything, just trying to get your 2 or 3 or 4 points. If you give me 10 points up, can I get 4, 5, or 6 back? And admittedly, the range is tighter, but it's the same concept. So back into the 81s, that's your 456 trade right there. And the gravy part coming back down in here to get that angel test. So by adjusting, if I want a swing chart from that low, like we talked about earlier, to today's high, then just make that simple adjustment, just show the day's range and show the swing zone by plugging in the actual values in that time frame, and this will show you that relative position. So a 456 trade is going to get us back to that 79.5 to 77.5, and obviously to what would be a dime off the top, the 75 and a quarter. That'd be a 456. And a reminder that this thrust so far, the daily thrust is up. So theoretically, you can buy your pullbacks. And I said today, I'm going to think much more neutrally, including take out the lows and the highs. So this is a representation, and that's easy enough to do with a widget. You can either do it on today's chart or just set up a separate chart if that's what you want. And then once we mark our ideas for potential squeeze pivots, if the shorts are in control, and that's a big question, but if they are, then these become targets for them to knock out one by one. So we'll play around with this chart too today. And just go change your levels, the high lows on the chart, and that'll put it right back. Anybody that's taking the short side trade based on yesterday's resistance zone, good for you. I said, I think two-way day. I'm glad this worked out for both sides already today. I like to see a fair trade like this where shorts don't get skinned. You know, if you're patient and if you have a reasonable expectation, you can make your VIG. And I like the risk takers this morning who said, you know what, we're not going to crash down here. We're going to go test some resistance. I like both these ideas today as common sense. You stay balanced, stay neutral in your thinking, and you'll see things that a lot of traders won't see. And you'll be much more apt to act on them without an extreme bias. You know, you're out there in the political world yelling and screaming, all you see is your side. You don't see the other side. We said that we're going to try to keep this somewhat clean today, to try to see things as they happen. This was a trend line that we had put on earlier. So that's the neckline. You got to break that neckline for further travel. And obviously this was the breakout. Come back and retest 80 and a quarter to 80. We talked about this zone earlier, how this is probably an important middle zone. So right now, the shorts have a great trade going on, and we've got the end of the hour coming. So we've come back to where we started, basically. And I'm going to take these lines off. Again, I'm trying to help you see things without a lot of stuff on the charts, but to see those patterns in your mind, perhaps. And I said, if you had a trailer, you could possibly get back and test this 78 to 77. And that's come together. And that's a great trade because it washes out the longs that held on and thought that they could just ride this up here. Great reaction today. Look at the tails up here above 84 on your 5-minute chart. I used to have some of those spaghetti charts that a lot of traders have. Everything too much, and then you throw everything else on top of it. How do you even see? How do you keep your mind clear? Even talking sometimes is too much. Bingo. 10-pointer off the top is 76. 75, 75. Make sure you're paid 77. Stops down. Got a solid run here. We know a big boy's in that trade. Make sure you are paid. Range type trade for now. We've expanded the range on the long side, not the short side yet. swing chart. And you can see from that low to that high, using the resistance zone, great solid trade. Anybody that took this trade and didn't worry about moving averages or anything else, that great solid trade, just thinking about the resistance zone, coming back to the middle. 75.25 would be a 60 back, 4, 5, 6. And these traders have all been taken out, these early traders here. This is really 8 o'clock idea right in here. All those traders have given them back, just like yesterday. Still thinking neutral. I'm not thinking plunge. I'm thinking neutral. Range type day, and if we take out the lows, anything goes. And I I still think I wanna think neutrally. Just observe the market moves. Look at the timing ideas. Look to see if you can see patterns. Ran into resistance. Obviously coming back to test support. Angel right here. Learn to identify where the angel and where the demon is. And that's your demon, RTH. No angel yet, RTH. Been taken out. Anybody's got the dime off the top, paid for, sure. Into the second hour. Now you can take a look at how deceptive these moving averages can be. Up, 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 looks like it's never, and then the wrecking ball trade comes right down through it. Shorts have done what they've needed to do. Over and under. Neutral day so far. Do we have retest failure? Who knows? Too early in the day to tell yet. But if you like the short side, you got a great entry as opposed to trying to start it right here in the middle. Initial support this morning, 73.5 to 72. Still support until broken. Those are theoretical ideas. We said possibility today we could break both sides of the overnight range because it was so small. And all of this has been fairly quick and fairly fast, and will be subject to re-auctioning too today. But for now, anybody that went long side is and hoping for the new targets up here has had to abandon that idea, and quickly. Be a two-way trader. Much better odds if you're a two-way trader. Squeeze pivots being challenged right here, correct? And then the last one, the low of the day. This is based on the overnight, yesterday's low, and then the RTH high, the swing range. So this is a mini swing chart. 456 trade is done. Typically, that will suggest that this is a deep pullback, and you give much less credibility to the long side because of it. It's still a contra move to that thrust, but because it's come back so far, it kind of negates the idea we can just go flying, come out the top. Now we're looking over here, and we're looking here, and we're looking here. Thank you, Zeke.